Hey everybody, welcome to the Rags to Riches show. It's June 18th, and today was a day of holding steady in the markets despite some serious global noise. The Federal Reserve made waves with its latest decision. Middle East tensions kept oil prices volatile, and political moves like Trump's early G7 exit had investors on edge. So, from standout stocks to personal finance strategies, we're diving into what happened today and how it impacts your money. Whether you're an investor, a trader, or just trying to navigate your financial future, I've got you covered with clear, actionable insights. So grab your coffee, settle in, and let's break it down. Here's a quick rundown. Markets ended nearly flat after a choppy session. The S&P 500 just slipped by 3 bips, the Nasdaq inched up by 13 bips, and the Dow Jones dipped by 10 bips. Oil prices hovered around 74, 75 a barrel, reflecting Middle East tensions, and the Fed's decision to hold rates steady set the tone. We've got politics stirring the pot, stocks making big moves, and plenty to think about related to your financial plan. On that note, let's dive in. Now, starting with the markets, because today was about as resilient in the face of big headlines. The S&P 500 closed down a hair at 3 bips, the Nasdaq eked out a 13 bip gain, and the Dow Jones slipped by 44 points or 10 bips. That's a near flat finish after a volatile day, and it's in stark contrast to yesterday's sharper declines. What kept things steady? A mix of Federal Reserve latest moves and ongoing global tensions. Surprisingly, right? A big factor driving today was the Fed's decision to keep interest rates unchanged at 4.25% to 4.5%, exactly as markets expected. But the real story was in the details. Chairman Jerome Powell signaled 2 rate cuts that might come later this year, but the Fed's also worried about inflation for Trump's tariffs and Middle East oil spikes. That cautious tone kept markets from rallying, but also prevented a bigger sell off. Meanwhile, the Israel Iran conflict, now in its 6th day, kept oil prices elevated, with West Texas Intermediate crude settling at 74.75 a barrel, nearly flat after recent surges. Here's the oil picture. WTI crude stayed steady today at 74.75, down slightly from an intraday high, but it's still near a 5-month peak. The Israel Iran conflict, with missile exchanges targeting energy facilities, has traders worried about supply disruptions, especially through the Strait of Hormuz, which handles about 20% of global oil. That's a big reason why energy stocks like ExxonMobil and Chevron held steady despite a shaky market, though they didn't see big gains. Politics played a big role too. President Trump's early exit from the G7 summit yesterday continued to ripple through markets. His call for Iran's unconditional surrender and comments on True Social about China needing to step up for a trade deal added uncertainty. Posts on X reflect investor jitters as well. Some see Trump's moves as a negotiating tactic, while others see signs of unpredictability. That trade deal snag after hopes of tariff cuts earlier this week kept a lid on market optimism today. Now, breaking down the sectors, energy stocks were flat, with the S&P 500 Energy Select ETF unchanged as oil stabilized. Tech saw mixed results. Nvidia and Broadcom dipped slightly, dragging down the sector by 20 bips, partly due to Taiwan's tightened export controls on China's Huawei and SMIC. Financials outperformed, up 30 bips as investors leaned into banks and insurers for safety. Consumer discretionary stocks like retail and travel slipped by 50 bips. Higher oil prices could squeeze consumer budgets. Now, if you're in the market, today's flat finish is a reminder to stay calm. Tech and growth stocks are feeling trade and geopolitical pressure, but the Fed's signal of potential cuts could lift them later. Energy investors might see upside if oil keeps climbing, but broader risks are a headway. Cash heavy folks, volatility like this, like I've been saying the past couple days, sets up potential bargains. So have a watch list ready, and if not sure about an individual security, think about a broad, diversified index fund. Now, pivoting into the economy, because the Fed's update today is a big deal for your wallet, the Federal Reserve held rates steady at 4.25% to 4.5% as expected, but their statement in Powell's press conference gave us plenty to chew on. They lowered their 2025 growth forecast to 1.4%, down from earlier projections, and raised their core inflation outlook by 3.1%, citing tariffs and oil price risks. Now, that's a nod to potential stagflation, slower growth with sticky inflation. And get this, the Fed's saying the economy's slowing. Yesterday's retail sales just went up by 20 bips in May, below the 40 bips expected, and housing starts were down by 3%. Industrial production was flat too. These are signs of a cooling economy, which could push the Fed to cut rates later this year, maybe in September or October per market bets. But with oil at 74.75 and tariffs looming, they're worried inflation could creep up, so they're playing it cautious. Trump's or sorry, Jerome Powell's press conference was a main event. He said, quote, uncertainty has diminished but remains elevated, a line straight up from the Fed's Teal Book. Translation, they're optimistic about rate cuts but need more data on tariffs and geopolitics. Markets priced in a 61.1% chance of a 25 basis point cut in September, maybe lower rates heading into the fall, according to LSEG data. That kept stocks from tanking today, but it didn't really spark a rally. Now, interest rates are the pulse of the economy. Higher rates mean pricier loans, mortgages, car payments, business expansion. Lower rates free up cash, boosting spending and stock valuations. In 2020, near zero rates fueled a market surge. If the Fed cuts rates twice this year, as they hinted, growth stocks like tech could shine. But if inflation from oil or tariff spikes, they might hold off, keeping pressure on riskier assets. For your money, the Fed's stance is a call to stay flexible. If you're investing, a dovish outlook could lift your portfolio. Tech and consumer stocks love lower rates. If you're saving, today's 4.4 treasury yields are still solid. Consider a 7 to 10 year bond or CD to lock in returns before cuts hit. Planning a home purchase, mortgage rates now around 6.5% could ease if cuts come, so timing matters. Keep an eye out for tomorrow's market reaction to the Fed's words. There's always a bit of that after these meetings. Now, politics was a big player today. It's not just background noise, it's moving markets. Trump's early exit from the G7 summit yesterday continues to ripple. Ex-posts call it everything from a strategic flex to a sign of U.S. isolationism. His push for Iran's unconditional surrender and evacuation of Tehran's escalated tensions, keeping oil prices high and investors cautious. That rhetoric raises the specter of deeper U.S. involvement in the Middle East, which could unsettle markets further. And then there's the US China trade front. Earlier this week, markets rallied on hopes of a deal slashing tariffs from 145% to 55%. But Trump's latest Truth Social post saying China needs to step up threw a wrench in that. X sentiment reflected the frustration. Investors want clarity, and they're not getting it. Without a trade deal, tech and manufacturing stocks could face more pressure, and consumers might see higher prices. If talks continue to progress, we may see a quick market pop. Politics shapes your money more than you might think. Uncertainty from Trump's moves is keeping markets jittery, but a resolution, whether on trade or geopolitics, could spark a rebound. Stay informed because these headlines are just not going away. Now, let's zoom into stocks that define today's action. Some soared, some sank, and others are just out there. Here's a breakdown. First, a headliner. We keep talking about this every day, but it's true. The Trump Organization launched Trump Mobile, going back into my infomercial mode, a $499 US-made smartphone with $47.45 monthly plan, including 5G, roadside assistance, and telehealth. He's pitching the made in the US to stand out, but the smartphone market is brutal. Apple and Samsung dominate. Google's fighting for scraps. There's no public stock to track, but this could reshape the Trump brand if it gains some traction. Now, Circle Internet Group, the USDC stablecoin issuer, jumped by 12% today after the Senate passed the Genius Act, setting a federal framework for stablecoins. That's a big win for crypto adoption, and Circle stock has soared over 400% since its June 5th IPO. Stablecoins could disrupt payment giants like Visa and MasterCard, which both fell about 5% today. On a secondary note, there's a broader conversation about the issuance of stablecoins being good for U.S. fiscal health. Stablecoins under the Genius Act legislation would need to purchase treasuries or short-term money market securities as collateral or the backing for the projects that they're putting out there. More buying pressure means higher bond prices and by consequence lower bond yields. And the Fed needs someone to buy these bonds, and they're clearly not doing it, so maybe these stablecoin issuers will. GameStop was a big loser, continuing its drop after a $1.75 billion stock offering. Ex-post flags the dilution risk and new shares continued to dilute existing ones, and investors bailed. Here's a reminder, meme stocks can be a wild ride, so make sure you tread carefully. Oracle kept shining, up 7.7% after a strong Q4 earnings report. Cloud growth and AI are driving its rally, making it a standout in a flat market. If you're in tech, Oracle may be a name to watch. JetBlue continues to slide after announcing cost cuts and fewer flights. Higher fuel costs from $74, $75 an oil barrel are biting. Enphase Energy, a solar inverter, fell 24% as a Senate budget proposal phased out solar tax credits by 2028. With oil prices up, renewables are under pressure. Again, we still see strength in U.S. steel because of the Trump approving its $14.9 billion acquisition by Nippon Steel. It's a bright, rare spot. Additionally, we see Kering behind Gucci, rose on news of Renault CEO taking over the helm, a leadership boost for luxury. Now, heading around the world, markets are a global story, so let's just take a quick spin. Europe ended flat, London's FTSE 100 slipped by 20 bips, Germany's DAX was flat, and France's CAC 40 gained 10 bips. The Fed's decision and Middle East tensions kept sentiment cautious. In Asia, Japan's Nikkei 225 fell by 30 bips, China's CSI 300 dropped by 50 bips, and India's Nifty 50 eased by 20 bips, with pharma stocks like Sun Pharma down 1%. Crypto, though, stayed strong. Bitcoin hit 104,000, down from an overnight high of 105,600, but up 2% today. Ethereum gained 3%. The Senate stablecoin rules boosted optimism, but with Circle's surge as proof. Crypto's up over 100% this year, but the volatility is real, so make sure not to dive in blindly. Now, let's bring it home. How does today affect your finances? Well, firstly, oil at $74.75 a barrel means gas prices could rise soon, maybe $4 a gallon in some areas. That's going to be a hit to your budget, especially for commuters or travelers. Inflation's at 2.4%, near the Fed's target, but oil and tariffs could push it towards 3.1% as the Fed warned. That means higher costs for groceries, utilities, and more. On savings and borrowing, the Fed holds at 4.25% to 4.5%. Keep things steady for now. Treasury yields at 4.39% are attractive. Make sure to consider a 7 to 10 year CD or bond ladder to lock in those returns before cuts hit. Mortgage rates around 6.5% might ease if the Fed cuts in September, so if you're house hunting, patience could pay off. Something to keep in mind, though, is that if rates decline, there will be more buyers and we may see a price rally in the housing market. It's all very local, but it's just something to have in the back of your head. For investors, today's flat market is a chance to reassess. Oracle's rally shows strength in AI and cloud, while energy stocks could benefit from oil's climb, but diversify. Don't go all in one sector. Now, the Senate's Genius Act for stablecoins is a real game changer. Stablecoins like USDC or USDT could simplify payments for hedging volatility, but they're not risk-free, so make sure you research these things before jumping in. And with markets being volatile, a cash cushion is key. Days like today reward those who can buy dips without overextending. Here's how you can stay ahead. Number one, make sure to diversify your investments. Spread money across stocks, bonds, and cash. Edward Jones recommends overweighting U.S. large cap and mid cap stocks, plus financials and healthcare. Now, you got to also protect yourself from inflation. With oil up, consider Treasury inflation protected securities, tips, or real estate to hedge rising costs. Secondarily, you need to build an emergency fund. Make sure to aim for 3 to 6 months of expenses in a high yield savings account. Volatility creates opportunities, but only if you're liquid. And finally, plan for rate cuts. If you're borrowing, rate for potential cuts to snag a better rate. And if saving, lock in yields today now. These steps, grounded in today's data, can keep you resilient no matter what markets do. So what's on the horizon? A few things to watch. You got the Fed fallout, so tomorrow's market reaction to the Fed sentiment could set the tone. Dovish vibes might spark a rally, but hawkish ones could dampen sentiment. You got Middle East tensions. If Israel-Iran escalates, oil could hit $80 a barrel, pressuring markets and inflation. And then trade talks. U.S.-China progress could lift tech and manufacturing, but a stall could slow them down. My take, markets are treading water, but the VIX hitting a 3-year high signals more volatility ahead. Stay patient. Opportunity comes to those who wait. Now, that's the wrap up on June 18th of 2025, a day of steady market, big Fed news, and global drama. I hope this gave you a clear lens on what's moving the needle and how to position your money. But more importantly, what's your strategy? Buying into stability or waiting out? Drop it in the comments. I read them all. If this helped, make sure to hit subscribe, the bell, whatever you need to do to stay updated for tomorrow's breakdown. There's also a Linktree in the comments section if you wanted to see some of the links of some platforms I really am passionate about, and also our other social media channels. So guys, until then and until tomorrow, stay smart and keep your money working for you. Happy early Juneteenth, and I will talk to you all later. Bye now.